Hey, good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Tuesday, July 17th, and we got a few economic news releases scheduled for today. And actually, a big news on the headline news is Bernanke's testimony before the Senate Banking Committee earlier or this morning. So we'll start off with the Consumer Price Index. This is the CPI for June's numbers. So in May, we had cause of deflation almost. Basically, it was a negative 0.3%. Basically, we forecast it would come to zero, and well, it came in at forecast. So basically, inflation's very much tame right now. And once you take out the food and energy, which just creates the volatility, we get the core CPI, and this is really the number that the Fed watches. And we had 0.2% back in May. We forecast it would be the same, so still remain at a steady growth. And basically it did. So as we wipe out the food and energy, we do have some growth or some inflation that's attached in there, but it is modest. So this will probably put us on par for the 2 to 3% range where the Fed likes to keep us. We also have the industrial production for June. Back in May, we had a negative 0.2, so there was a contraction in the industrial production, and we figured it would kind of jump up a little bit to 0.3%, and it did. So that's kind of good news that we see some improvement in the industrial production arena. And then lastly, we had the home builders index. This is the gauge for the home builders, what they're feeling and such for July. So back in June, we had about 29. We figured it would have a slight increase, and it jumped up to 35. So home builders are feeling a little bit more optimistic right now, which is obviously good news, as they're kind of seeing where things are moving along. As if you've been following, I've been saying that the next 2-3 years, because we have a lack of inventory, home builders are kind of getting back into the market and starting building new homes. We also have investors going in buying older homes, dilapidated homes, rehabbing them and flipping those properties as well. So you're seeing a lot of that more in this market right now. So let's jump over to headline news right now. And basically, the stock market is up currently. It had a pretty steep decline earlier today. We did start off, I saw earlier this morning, within the past hour at a it's down. The Dow was down like negative 71. Now it's up about 58. So we had a pretty big swing there, about 120 basis points swing right there, and that's going up as the testimony, Bernanke's testimony before the Senate Banking Committee, basically comes to resolve here. So some of the points that came out of there is that obviously the Fed has no control over what Congress does here, and the Parliament over in the European communities do. The quantitative easing is not something that they're going to, it's not off the table, but it's not something that they're looking to just jumpstart or stimulate right now, as they're just kind of watching to see how things progress. So he's got a few things in his tricks bag, so to speak, and he is obviously encouraging Congress to make sure that we have plan for budgets, so it's better to act now than later on. So it's open to the market, so the market sees these things, that we have some fiscal restraints. If you look at some of the articles out there, especially on MarketWatch, where I like to go to, there's a lot of doom and gloom markets saying that we're just beginning. From the reasons being that we're just beginning is from this new scandal, where we're going to find out what's going to lie ahead with the LIBOR scandal that affects consumers, municipalities on a global level. That this is just the tip of the iceberg, and this could be a lot worse than what with the credit crunch back in 2008. Also, there's going to be new taxes kicking in January 1st, where the marginal tax rates go up, and that could hit a lot more people. And there's a lot of combination as to we're just we could see a big crash coming up. Like there's an article on MarketWatch basically thinking that we're going to have a huge crash around 2013-14, around 2014, coming in here, where half the wealthy could lose their wealth on there. So it's gonna be interesting to watch, see how things play out. Whether if it's if you believe in the doom and gloom, check it out. It's worth a read. It's obviously you want to protect your assets, so encourage you to take a look at it. Let's go ahead and take a look at what the bond market is doing and where interest rates are at today. So we'll jump over there right now. We're about where we left off yesterday. We did start the day off about 6 basis points lower. As we saw, we touched the ceiling, and we pulled back yesterday, so that's why you see that red candlestick going downwards. And so we started the morning off about 6 basis points, and now we're about where we left off yesterday. So, and we did touch the ceiling earlier. We were up about 9 basis earlier, and then we kind of pulled back a little bit. So, give you kind of gauge as where we are. So, interest rates are, in essence, are really about the same. There's really no change in the interest rates today versus yesterday. And obviously, 2 days ago, we had a nice increase where we had the, at some point, they're going to probably, that opening gap that we had from Friday to Monday, they'll probably be closed at some point. It could be today. We don't know. As more money is going to the stock market and pulling out of the bond market, that could close a gap today. That's possible. All right, so just be cautious. But right now, interest rates are, as of right now, interest rates are about the same where we left off yesterday. You guys have a wonderful day. I will see you guys tomorrow, and thanks for watching.